Good evening, all. Ira Epstein, and here we are. And this is Thursday, and we're at the 28th of September, 2023. And the time right now, getting on to 6:25 p.m. Central Time. Well, we're going to have one of these beautiful weekends in Chicago of weather where we go back into the 80s through a good part of next week, and then the bottom falls out. We'll be going in the highs, maybe 60s, the lows back into the 40s. So fall, it's on its way, but we get one last respite, and I'm going to enjoy it. Now, we've been getting a bit of a rally. Why? It's probably short covering. Makes a lot of sense if you think about it. The market at the last minute saying, okay, what do I do? Are we going to get Congress to get together? Doesn't sound like it to me. I've been saying that for a few days now. And that's the timing of all this. It's taken too long. The Republican Party can't figure out what it's doing. They're just absolutely not together on anything. But they're getting lucky. And they got lucky because an issue, the border issue, is going to make them look like heroes if they have the guts to hold out until they get money for the border issue. So since they're taking us to the abscess of things, why not make something out of it? So you go to the abyss, you're down at the hole. Remember that movie where Ed Harris was in it? It was a great movie. And you go all the way down there and you say to yourself, okay, I've shut the government down. Families are beyond pissed at me. The kids can't go to where they've got to go. The wives or the husbands can't go to work. Somebody's got to stay home and take care of blah, blah, blah. I am really aggravated. But then we're all pissed about this immigration issue. And there isn't a major city that isn't under pressure. I think Chicago has gotten 30 busloads this month of immigrants. Can you believe that? And I mean, what do you do? And this, they're talking spending $30 million to build an outdoor tent city in Chicago, heated tents in the wintertime. I've seen stupid things. This has to rate amongst the most stupid I've ever heard. We have plenty of buildings for the same $30 million that we have all over the city where they can go in and make them habitable for a lot less money and have the people in those buildings with working toilets and everything else. This is crazy. Even finally, our governor said, I think there's a better way to do this. And I think he's right, and I'm not a fan of his. So we look at all this and we say to ourselves, what do we do? Because now you've got the point where the government's going to be shut. Well, you don't do anything. This isn't the first go-round with this. I've been through a number of these. You wouldn't even know it's taking place because it lasts very short. The pressure's too great on the politicians. They have to find a way to get you out of this, both Democrats and Republicans, because it starts backfiring on the other party all the time. They go, well, why can't you give a little? You just need 30, 40 days in order to work this out. Come on. That's what I think the Republicans can hold out for it. Just like Trump says, let it shut down, but get something. And he's right on that. And the something should be money for that border. We've got to shut our border down. Then get it all done, and we go back to work, and then everybody can get mad at all the politicians. I love when we're mad at them. They're, a real group. So what else do we have going? Well, just the nature of the break has been so big that a bounce is likely. But once that's out of the way, guess what you have to deal with? If inflation numbers don't come down, the Fed's sitting there with a cocked pistol. It's waiting to pull the trigger. Now, we have another set of data tomorrow, and I want to take you to that before I get here. There we go. Here might be the last reports we get for a while from the federal government. All right? And not all these are federal, obviously. We get the University of Michigan isn't federal. All right? But we get personal income spending and the very important PCE price index for August. Now, this isn't September's, it's a month back. A lot of people are looking at that report, and I've already heard, we're going to see that inflation's falling. Sure, maybe it does, but is it falling fast enough? And that's going to be another issue everybody has. So here's the numbers they're looking for. We do get the Chicago PMI index. That's going to come out at 845. They're expecting it down slightly. University of Michigan, they're hoping that consumer sentiment, as you can see, it's about flat with where it was. So we will get from S&P 500 group, their reports will come out. Case-Shiller will come out. All those others. But the federal government reports will not come out. So tomorrow's the last time you're going to get those. And when you don't get them right away, what happens is there's a backlog sometimes that occurs. Let's go and take a look instead of this at prices. So you're getting a little bit of short covering. You saw that in the market. It's happening in the metals as well. The dollar was down today, first break we've had in quite a while in the dollar. And if you lose the bearish embedded reading here, you can get more of a rally if that occurs. If the dollar loses its bullish embedded reading. Tomorrow morning's Spider ETF video is going to be super important from me for the subscribers when I go through the 40 charts in both the ETF Spider and the futures markets, because many are on the cusp right here. So this was the rally, if you will, the relief rally in stocks, and you start down again and you keep the embedded reading. Same in the dollar. You were up, you got over the Bollinger Band, and you started backing off. What is that? On the energy market, well, you're not up against 95. You've had a bit of a break in it, so the market's taking a little bit of a breather. And we've been getting a bit of short covering, not tremendous amount in the bonds and notes. Now, do yourself a favor. If CNBC on their website has the interview with Bill Ackman that took place about 3:34 today, go look at it. You'll see another man's point of view where he's really super bearish. Bearish being he thinks interest rates have to go higher. He thinks for 30-year bonds you're going to 5% at least, and some of the others you'll be into the 6 area. See what he says, his rationale behind it. You decide. He runs a very big outfit for making these bets. Pershing is nothing small, and he's quite brilliant. So doesn't mean he'll be right, but it's worth reading. So when we look at the S&P, we've stayed under the 18-day average. In my parlance, that means I have a bearish bias to the market until it's back over 44, 45, 50. It's got to close over that to get me friendly. Barring that, this is where I'm at now. And that's 100 points away, by the way. Was that the break low for the month of September? If it is, it was a hellacious month. I mean, this market went from 45.65 all the way down to what, nearly 42.65. So a 300-point break thereabouts. Oh my gosh, that's a monster number. The exact number was 42.77 and a quarter. Wow. Any way you want to cut it. And now you've got another bearish situation developing on rallies. Get up into this zone, and by the way, I expect the 18-day average will fall fast to even lower numbers than that. Wherever it comes in there, that'll be the problem. One way that you always look at it, you can take the high and low of this, take that amount, and then take a third of that, first bounce, take 50% the second. What am I giving you the equivalent of? You know what it is? Fibonacci. So you can also use, in charting tools, we have them, you can move top to bottom and see where the bounce should come in. A lot of traders do that. They'll look for the reaction off those numbers. I don't use it that way. In fact, I don't even use Fibonacci. I find it too difficult. I love using moving averages in my Bollinger Band. And I said yesterday, you're at the zone, as far as I'm concerned, where since you didn't hold the 100 and you finally made it here, which was amazing, that's the secondary support. Now, you get under all that, again, you got a whole different world, but that's typically not what happens. So what is charting about? Looking for the probabilities, looking for support resistance zones. This was a logical cover shorts, but now it's illogical. Put them back out as long as you keep the slow stochastic embedded. Got it? If this closes over 21 tomorrow, I can't be short anymore. I wouldn't want my clients to be short. If it doesn't, I think selling this rally makes the sense. That's the risk factor that you've got at this point. Another thing, if we wake up in the morning and magically Congress has solved the situation and in the next 2 days as we'll close, maybe on Saturday before midnight. They say they have solved it. The budget. Is that a real bullish event? No. So don't get caught up in that. It takes away some of the bearishness this did because people may not understand what happens during the period when the government shuts down. But no, it's not going to magically turn things bullish. Maybe you'll get more short covering, but what have you done? Nothing. I mean, nothing. You bought some time. What have you resolved? Oh, for 30 days, we're going to do this. And you think that's a change? So emotion. Got to always think about it and be a step ahead. What may happen? I might get some short covering if they can do that. So the first thing that happens Sunday morning, they covered it. Sunday night, the market will be up. Yeah, and the pros are probably waiting to sell it, depending on where the Bollinger Band is and depending on where the slow stochastic is. Resistance now coming together at 15,230. And guess what? It'll take little for that 18-day average to get under the 100. Then you get another bearish setup where the market often goes and re-challenges the lowest low it just made. Doesn't mean it has to, but that's often. Same in the Dow. You've had your bearish crossover. As you did it, you went down and immediately made the lower low. Now, what did I say yesterday? I'm going to repeat. Markets rarely go beyond 5 days in a row in futures under a Bollinger Band, and then you move to the right-hand side. Gee whiz, let me see how I count the way. This is yesterday, day 1, 2. This day you were above the Bollinger Band. You didn't hit the 5. You only had 2 coming in. And you gave your bounce anyways. Okay, but it's rare that you do that. In the Russell, same thing. But Russell now is a little interesting. Now, let me show you something that you got to get a feel for. You're losing the embedded reading right now, which means the market is saying, to me at least, you can't deploy new shorts. And if it stays lost, you're going up probably to wherever that 18-day average is. But what is the time right now? Here we are in the close of business Thursday. The slow stochastic reading was 1889. It wasn't lost. So while it's lost in the early evening tonight, that doesn't mean it's staying that way. We are all of at this point, what, an hour and a half into the trading? Got to see what it'll do. If it's going to run, expect resistance at 1839.70. If it falls from here, a retest of down there. It's going to be an interesting time. You're right at a cusp. In the bonds and notes, you got to the Bollinger Band, you're just moving to the right. Same thing here. If you lose the reading, which you haven't done, that can generate more short covering. Eventually, a move to wherever the 18-day average is. But you haven't lost it. So on the way up tomorrow, in the morning especially, is going to be an interesting time to look at the market. Gee, could it be a short sale that it's right on a cusp? You're out at the end of the day if you lose the reading, and if not, using that strength to get short. If you get into my morning subscriber video, this is the subscription one. I keep offering it free if you haven't tried it. We're going to be discussing all these strategies tomorrow. It's going to be a good morning video. I'm going to get a good night's sleep tonight. Now, here we are in the 5-year note. Now, in the 5-year note today, just take a look. Where did it finish the day out? Here's the close of business. Was still embedded. But it's been hitting it, and I figured to myself, maybe we'll get a bounce out of it. And that's basically what's happening. But if you re-embed tomorrow, you're still very, very much in the bear camp. Let's assume it doesn't. Then I'm looking for it to get probably up to the 18-day average and fight a battle there. And I think at the end of the day, it still gets bearish again, but it works out of this oversold condition that it could be in. In the dollar, I tell my clients never to buy against the upper Bollinger Band or over it. But you fell today, and I think the pros began nibbling. Same theory. Tomorrow's going to be important. If I'm wrong, I'm wrong. Now, I can tell you what I told my subscribers today. Trade small. In other words, cut your positions in half if you're going to play the currencies today. The same in the bonds and the notes. I told them the same, and in some of them, I told them to come out. So I don't mind telling you what I told him. I'm not going to tell you where I did it, the prices, none of that. And I can prove what I'm saying. So here we are with, by the way, I do this all on video, so it's very easy. You can see how the market is coming down. Now, are we going to lose the embedded reading? You haven't yet. It's flirting with it. I get it. But if it re-embeds, you get this very often. It comes up, it kisses, and it nosedives again, and that just starts another leg. What's the number? Well, if the dollar runs, we have price count numbers that if it wants to run, 112, 114 is a very realistic price count. It's hard to believe it's that high. I have a hard time, but when I look at the count, I see it. That's the outlier number. So we'll see. In the British pound, a bounce in a bear market. I think the pros are hitting it right now, right here. I think they'll get out if the number's over 21, and if not, they'll look to see can the market come back there to 121.03. In Bitcoin, as I said yesterday, I don't see a trend. You have a lower low, higher high, fighting at the upper Bollinger Band. When we go to the Brent versus December WTI, you can see how you're just falling away here. But the differential, it's come in now back into the dollar level. Don't get me wrong. You were only up here when you look at the difference about $1. What is that? $1.08. So you're back down 5 cents. But that's a lot in the market, the difference. In the Brent crude, well, do you think I'm surprised at a non-embedded reading? You lost the embedded reading and you came down, hit the 18-day average after you did it, went back to the Bollinger Band, and you're playing. I don't see a trend to trade right now. I see a lower low, higher high, fought and fighting the big resistance. The oomph thing that it had is out of that. That doesn't mean it can't come back, but I don't see it right now. I think you're losing that momentum here, and I feel the exact same things taking place in the November. So could the big run for the moment be over? Yes. Straight answer, yes. You'd have to re-embed to convince me it's going to happen. It ain't going to happen right away. It may not even happen next week. So I think profit taking's the way that's going. Now, what I think heating oil is doing is it's got to prove itself. It got under the 18-day average, it climbed back. Colder weather, you hear me talk about it already. We're going in Chicago, not this week, the week after, they're already saying we'll be in the 40s. And the highs during the day are going to be the 60s. That is when you're turning on the heat. That's Chicago. There's other parts of the country, but it's the beginning. You know, October brings cold weather. It's that simple. So I'm watching this to see what happens. Resistance pretty strong at 338. The weekly chart is more bullish than the daily chart in the heating oil. And in the nat gas, you actually run into this is the seasonal time of the year to be short. Isn't that amazing? Just the opposite of what I think. But it is. I was looking at the Moore Research Center news today, and that's what it is. I don't see anything here. I see a market that is void of any real trend. So, government shuts down. Where do you get your information? What do you know is going on? We want to be the guy you look at. We're pros. These guys that I'm with at Linn, they write newsletters like you can't believe all day long. I mean, we have people that's all they do. They're hired to do that. We have our own, for example, in the weather, we have our own meteorologist on staff. Then we use outside sources as well. If you haven't looked at our QT program and you see the weather, ships, where they're at around the world, what are they loading, it's all right there, all these trackers. So if you're a commodity guy, come on. You're probably not going to ever see this. You think I don't use TradeStation and all the other services to see them? Our products are better. It's really that simple, and they're yours to try for free. So how do you go about doing it? It's simple. Go to our website, sign up for the free offers under free offers. Be sure you sign up for the research, sign up for the price counts, give yourself another look-see at things that you haven't likely seen before, and make up your own mind. You can also click right up here. There'll be an icon, take you right to that area. I'm Ira Epstein. You have a great day, and I'll see you in the morning.